This is our Forex blog for October 1st, 2013. And like we do most days, we want to buy the strongest currencies versus the weak, and we want to sell the weakest versus the strong. This is our currency index, which is basically a synthetic chart of each individual currency. You got the dollar, the euro, the pound, the yen, and of course we got the other main pairs too. Swiss, CAD, Australian, New Zealand. And basically, in a nutshell, when you see a currency that's above its hourly moving average and trending up, the Swiss for the beginning of the day until 5, it was strong, so you want to buy that currency versus a weak one. You can see the CAD's going down right here. And so in a nutshell, the CAD is above the Swiss. And so because the CAD is falling and the Swiss is going up, at least until about 5, 6 o'clock here, you want to be looking to sell this currency. Actually, the Swiss was only going up until about 440. So until 440, you're looking to sell this. If you look at the chart right here, it's about right here. And that was when it broke down underneath the trend line here, underneath its hourly moving average. Before that, the Swiss was kind of slightly trending up. The CAD was weak. And so we're basically looking to sell pullbacks or, preferably 2-hour sideways rectangle patterns. But basically you have your first entry here with your stop above the high, here, stop above the high, here with your stop above that little rectangle pattern high. And basically, most of these trades were pretty small. However, that's the concept behind this. Let's go look for ones that are likely to give us more profit. The dollar was extremely weak from about 11 o'clock last night until 8. The euro was trending down too. The pound was as well. We saw that the Australian was going up. So weak dollar, strong Australian. You want to basically be buying the strong one versus the weak. It doesn't take a rocket scientist to kind of focus on these currencies. You have a nice explosive 40 or 50 pip move up here, and then here's that perfect 2-hour rectangle pattern, which also goes up 20 pips. You buy this little pullback, stops really right here. You can see it kind of went up. You didn't really make much on that trade. But the point is, this is your risk. This was probably what you would have made on the first trade. This is your risk on the second trade and what you would have made. This is your risk on the third trade, and that's the only one where the profit was probably less than what your risk was. And that's the key behind this. Now, if you notice that at 5 or 6 o'clock, if the currency is way outside the containment bands, so let's take a look at the dollar. Once it goes beyond the 2.0 band, it's very likely to reverse. So you can see that the dollar was already down too much. Really, since about 3 or 4 o'clock in the morning, you really do not want to be buying the Australian dollar anymore. In fact, you're better off looking for counter trend trades. So here's 4 o'clock. You probably did not want to take this trade, but if you did, you can see it went above that high up here, and then it made a double top. Pretty high probability place to go short. And you can see that with our containment bands, when you get short, when the market's up too much and you risk this much, you many times are going to make 5 to 8 times more on a counter trend move. Now you can use the individual charts, currency containment bands, or you can just put them right on the chart. Now I typically will use the regular simple moving average, which lets you see the hourly moving average, and then I will add the digital signal processing based bands to this. And typically at the 2.0 and higher, which I like to color white, the market will reverse. And you can see this was way above a statistically likely reversal area. And in fact, it's a pretty risky trade to be buying up here. You can certainly do it when you're trading one of the strongest ones, but be aware that you're not going to probably make more than 20 or 30 pips max. This one actually pulled back inside the bands and then it went up. But you can clearly see a nice little trend line break up here at the high. A lot of times trend line breaks will go down, come back up and test it from below, and that's, you know, great, really high probability place to get short. And a lot of people really just want to use our signals, FX trade signals, to know how to trade. And pretty much as soon as you get one of these signals, you get in at the close of the bar and your stops are underneath the low. And so you have a very small risk on that trade. It goes up and it gives you a sell signal, so you want to, you know, if it does go one bar or one pip underneath that bar's low, you exit your previous long and you flip and go short. And you can see that one, you know, the market came down and kind of went sideways. Since it is obviously trending up and you had a previous buy signal, you might, when it goes above this high, go long again. We typically do not buy or sell breakouts because it's a pretty low probability trade, and the market went up statistically too much, pulled back, ran out of momentum, it's up too much, very likely to reverse. And you can see that these signals are all designed for, you know, it's designed to find trades that are more likely to go 2 to 3 times more pips your way than what your risk is. And when you're in a short trade and you get a buy signal, if it goes 1 pip above that bar's high, you exit your short and you flip and go long. So you have a small profit here, you got a sell signal, you exit your long and go short, you got a small profit here. You would have lost on this trade, you would have made a little bit on this trade, made 10 pips on this trade, you know, probably made 5 pips. This trade here failed. This one, you know, generated decent profit in comparison to the risk. You know, you got a small profit, pretty much break even, small profit, you know, break even or loss. And typically people don't trade after noon. I still have the signals showing up because I like to test them during the dead times too. But I don't personally take any of these trades after noon. But you can see small profit, big profit, small profit, medium profit, loss, small profit, decent profit, you know, very, very small profit, loss, win, win, small loss, win, you know, pretty much break even, 3 pip loss maybe. The key to trading is small losses, big wins, and that's what's basically what we focus on. Again, these signals do not take breakouts. I may put those in a later date, probably 2 to 3 months from now, once I incorporate the currency indexes in these. Currency indexes are not in this.